Hi, everybody. Thank you for being here. Welcome to the May Monetary Policy Report press conference. With us today are Claire Lombardelli, Deputy Governor for Monetary Policy, Dave Ramsden, Deputy Governor for Markets and Banking, and the Governor, Andrew Bailey.
The disinflation process in the UK economy has continued. UK inflation was 2.6% in the latest data for March. That's above our 2% target, but it's a little bit lower than expected. So with the progress we have made, we can take another step in making monetary policy less restrictive. So today we've cut bank rate by 0.25 percentage points to 4.25%. As the past few weeks demonstrate, the global economic environment remains an uncertain one. Interest rates are not on autopilot. They cannot be. Instead, the MPC must continue to respond carefully to the evolving economic circumstances and the outlook for inflation in the UK. Whatever happens, the MPC will continue to set bank rate to ensure that inflation returns sustainably to the 2% target in the medium term.
Let's start with Ed and then Sam, please.
My first key message is that disinflation in domestic price and wage pressures is continuing. While headline inflation is expected to rise in the near term, we do not expect that to persist. Let me say just a word about the news, obviously, that has been coming out in the last few hours about the prospects of a US-UK trade agreement. We obviously follow this very closely. We haven't been briefed, so I'm speaking without knowing the content of the agreement, just to make that clear. That's as I would expect. But we do now have news that suggests there will be an announcement, and we welcome that news. I very much welcome it, and I think it's very well done to those involved. And the reason for saying that is that it will help to reduce uncertainty, and that's important, as you will see in the context of what we've said today. Jeff, can I just sort of break it down a bit? So half of that sort of new tariffs and elevated trade policy uncertainty weigh on global activity. We expect global trade prices to be materially weaker, particularly in China. The US administration has made a series of announcements with significant changes to tariff policies. Some of its trade partners have responded. Volatility in financial markets has accompanied these announcements. Slower growth in the global economy is likely to reduce the demand for our exports and impact economic activity here in the UK. That reduction in external demand will also work to reduce inflationary pressures in the economy. But while the impact of what we've seen so far is likely to push inflation down somewhat, the overall impact on inflation remains uncertain.
Thanks, everyone.
Thank you very much.